Good afternoon if you're in South Africa or Europe. Good morning if you're in America. What we wanted to cover today was the process of digitization and data in the private equity setting, especially from a GP's perspective, and how GPs are improving their efficiency and their performance through digital tools and analytical tools. And I've got a stellar panel with me today. And just to introduce myself briefly, I am the CEO of a business called Neu Capital Africa. We're a capital matching platform that focuses on the African markets to find investors for transactions in the $5 to $50 million range. And I have a reasonably good knowledge of technology and how this improves efficiencies, because that's where we work. I'd like to introduce each of my panelists. I'll just tell you who they are, and then I'm going to ask you for them to make an introduction. So it's Helene Gussard, who's head of alternative investment services at Riskura, a highly respected organization in South Africa. Dean Horton, who's the chief operating officer of African Infrastructure Investment Managers, and it is probably the biggest infrastructure investment operator in Africa. Ben Gudersky, who is sales and relationship manager at Sub-Saharan Africa for SSC and SS&C Advent, and the solutions provider in this particular space. And then finally, Yusuf Chutia, who's a specialist in strategy and digitization. So I'm going to ask each of them just to give a brief introduction to themselves and tell them something interesting about themselves. And then I'll ask them to each individually set the scene for what we'd like to cover. So perhaps, Helene, I can start with you.
Sure, Mark. My name is Helene Gussard. As Mark said, I'm the head of alternative investment services at Riskura, and so we have slightly a different view on the world in terms of private equity, in that we don't act on behalf of a particular GP, although we do sometimes work with one GP's work, but actually we tend to get data in from a number of GPs, and then we need to aggregate and amalgamate and use that data in a way to give reporting through to our clients, which are by and large pension funds. So that really is where we sit in the world, which is a slightly different place in that it's more about being able to take disparate sources of data, which is the same across all parts of the business, not just the PE part of the business, and quickly and effectively getting it into a usable format and shape, which we can then use to slice, dice, and analyze data on behalf of clients.
Thanks, Mark. Thanks for the introduction. Dean Horton from Africa Infrastructure Investment Managers. We've been in existence for around 20 years now. We invest in the African continent in infrastructure projects through equity and equity-linked instruments. Currently got about just shy of $2 billion under management. We've got footprint across the African continent in Cote d'Ivoire, Nigeria, Kenya, and South Africa. My function at AIM is the COO. Been with the business now for 7 years, and largely responsible for the oversight of finance, governance, and compliance aspects of both the GP and the funds under management. Currently, I'm located in Cape Town, been here in lockdown. Originally from Joburg, but relocated down to Cape Town to be part of the AIM stable. Something interesting about myself, Mark. Pretty avid sportsman and love socializing. So unfortunately, the lockdown has restricted those two aspects. But on the current levels of lockdown, at least we're getting back into sort of more activity and seeing people again. But thanks very much, and good afternoon and good morning to everybody.
Thanks, Yusuf. How about you? Yusuf, why don't you go?
Thanks, Mark. Thank you, Mark. I'm Yusuf. I am the manager for enterprise solutions at Future Growth Asset Management, one of the biggest fixed income managers in Africa. We specialize in both the listed and unlisted space. Enterprise solutions, so the domain that I'm responsible for, specializes in projects, the delivery of the portfolio of projects, software development, business analysis. So really enabling solutions across the organization. Something interesting. So I decided to take this webinar from the office today to avoid my kids doing a little cameo in today's webinar. Thank you.
Thanks, Ben. Thanks very much, Yusuf. Ben, how about yourself?
Sure. Thanks, Mark. Hi, everyone. My name is Ben Gudersky. I'm the Sales and Relationship Manager for SS&C Advent. Mark's not the first or the last person probably struggling mentioning that. We provide a number of solutions and services across the financial sector, from data entry, portfolio management, order management, through to client reporting and portals. I'm currently based in London. I was last in South Africa in February. I'm normally there about 6 weeks of the year. Very much missing it at the moment. Every time I'm thinking I might get a chance to come back, suddenly there's another wave, and unfortunately I've got a hold again. So fortunately, or hopefully we're out there before too long. Thanks, Mark.
Thanks very much, Ben. And Raman, if you can just switch the logo back to front. I think that's half the reason I'm struggling to pronounce. So to say SSC is because it's actually back to front. I am dyslexic, so it helps a little bit, but not completely. So what I'd like to do is just to introduce the broad themes we're going to cover before we get into some of the detail. And I'd like to start with Helene. I'd like to start with you because as an advisor to private equity funds in the broad, you will probably you'll be dealing with a much broader set of information that covers probably a broader set of issues than we will as individuals, as the individual businesses such as AIM and such as Future Growth. And it would just be interesting to get your perspective on the broader themes you think you'd like to be covering today, and then we'll go through. We'll speak to Yusuf because he looks after more specialist private equity funds, and then Dean on more specialist private equity funds.
So in terms of data, what's interesting is we do work with GPs quite a bit, and we do help them with some performance reporting and management. But in terms of data, it's most probably more on the pension fund side, which we have a huge use for it. And I think that it does make sense because the one thing we need to talk about, and which will come through quite a bit, is that data is a massive asset for any business these days. You know, that being able to have data that is accessible on a timeliest way. So in other words, you get it quickly and it's up to date. Knowing that it is accurate and being able to disseminate it in a good way, you know, is most probably what is the most important. It's sort of each one of those that it is where we're currently seeing things develop. On the first side is just trying to get to the point where you can, from disparate data sources and from everything from PDFs to Excel dumps to whatever, you can get data in, automate the process, get it scraped, cleaned, presented, and being able to use it quickly and efficiently. You know, it's definitely something which I think everybody in the industry works with and struggles with. And then secondly, I would say as if we look at it from our point of view, which is a slightly more helicopter view, is what it does allow you is, for instance, something which we can now do. I'm not sure if there's a use for it, and that's the next thing we need to talk about, is whether all data is good, usable data. But for instance, what we can now do is we can take private equity portfolios and we can daily tell you that if you are valuing them using certain comparators, what is the change in value to your private equity portfolio on that day? Which, you know, it sounds very exciting and great, but it does bring us to the next point, which is, you know, there is so much data and people want to have access to all of that data. But the question is how do you, and the term that we try and use is curate data, because our clients want access to all data, but not all data is equally important or equally impactful. And that really is where the space where we most probably also seeing a lot of developments is there is now all of this data available. How are we going to interpret and focus people's attention in terms of that data? So
there's some great comments. Thanks very much, Liam. Perhaps then just moving on to your staff, Yusuf, and I think maybe you could just also give a little context to this idea of digitization versus paperless versus automation, but just some of the issues that you would be grappling with as when you're looking after a generous GP.
Mm-hmm. Thank you, Mark. So I think the concept of digitization means something different depending on who you speak to, right? There are so many elements of digitization that we can consider both in the investment industry and wider. I think what usually happens is that when people hear digitization, they think of technology, they think of software, when in fact digitization is so much more. Digitization talks to have a real digitization. You talking about using people, process, and technology to support the organization, both in the operations of the organization and the ability for the organization to deliver value to its clients or customers. So when you approach digitization, you really need to think about the system. We often think of digitization or going digital as a goal. It's not a goal. Digitization enables something else. So when you start that journey of digitization, you really need to think about what are you looking to enable in your business, and then that will lead you to applying the right technology. So if we think about, do you want to reduce risk? Do you want to bring through better decision making through data and analytics? Do you want to reduce strain on your system by applying automation? Do you want to create insights through AI? Do you want to create scale through potentially data warehousing or cloud technologies? So on that journey of digitization, it starts with planning. Planning digitization is enabled by a digital strategy. So all of those components, people, process, and software, make up your digitization or your digital strategy. You need to ask yourself as an organization, why are we applying this change? What change are we applying? How are we applying the change, and when? So you kind of consider all of these things together. There are two parts that I think you're trying to enable, and this is what we're really trying to do at Future Growth, is using digitization to do two things. So you abstract it up to efficiency and effectivity. So when you think about using digitization for efficiency, you're thinking about doing things in an optimal way, getting the most out, putting in the least effort or the least amount of friction in the system. And that's good. It creates flow in your organization, it creates insights. But what precedes efficiency is effectiveness. So with effectiveness, you're really choosing what are you looking to digitize. So it's, as an example, you could choose to, with your effectiveness hat, choose to optimize process A. But process A is something that's perishable, and it could return less value down the line. So if you take it all the way back to efficiency, you plan and then look to apply. You take it from efficiency and then look to enable effectiveness as well.
Great. Yeah. That's very helpful. Thank you, Yusuf. Maybe Dean, I mean, you made an interesting comment to me the other day, and I was, to be honest, I hadn't thought about it, and that was simply that the amount of data that you have at your disposal it tends to be internally generated. I was also interested just to hear a little bit more about your thoughts on this idea of developing a forward-looking tool out of data, which goes to Helene's comment about data as an asset and how do we use it. So maybe some thoughts on that, if you have any.
Sure. I mean, I think just building onto what Yusuf sort of put out there in terms of effectively and efficiently. So across our business, I look at it, it's kind of under two channels. The one being operational, typical COO type role, looking at efficient means of using the data, versus on the other work stream, assisting and putting in processes on the investment side of the business, and enabling the investment team to run portfolio analysis just across obviously our portfolio. And you mentioned, I mean, we've got vast amount of data. We've got roughly about 51 portfolio companies. So it's really collating sort of the key data from each of the portfolio companies and looking at it from a portfolio basis and assessing, sort of slicing and dicing data, looking at either a trend on our solar portfolio companies, or our wind portfolio companies, or our toll roads or airports, and kind of taking that data and saying, particularly over the last 8 months, where we've gone through, I mean, pretty much the whole world's gone through a bit of a shock state over the last 8 months, and there's significant data points there, and sort of using those data points as well and building trends, and almost using that on a look forward basis and saying, well, right, we've established these trends. How do we use those data points to risk mitigate some of our issues around our projects? And can we identify trends or leading indicators that we can then implement both across the portfolio and also assist our portfolio teams in terms of, yes, we're going into this crisis, or we've established these trends, we've seen it across the portfolio. Can we roll it out? Discussions at the respective boards and saying, well, we've seen this before. Do we then relook at a revenue line item? Do we relook at our cost base? And just being proactive in that sort of sphere of the investment aspect of the business. Now, we've seen one of our areas that's used this sort of data points is on the ESG side. Our ESG team have done an incredible job in terms of taking baseline and taking all our data and establishing baseline sort of data, baseline benchmarks, and now monitoring that and ensuring there's a tangible outcome, rolling data forward and saying, okay, well, we've got this data in the background. Where are we now in a year's time? And analyzing that, and sort of, as I said, once again, getting trends, trying to meet objectives. That's where we want to roll out in terms of our investment, and that also then builds into sort of where we look at our investment strategy. You know, are we going are we going further into infrastructure like investments? Are we looking at renewables? Are we looking at more user pay principles? You know, in establishing the trends, and also breaking it down into sectors. You know, are we going to do gas-fired power plants? You know, where's the ESG world taking us on that path? You know, so it's kind of slicing and dicing the data, and not only, you know, looking historically, but obviously trying to predict trends going forward with all the amount of data that we've got.
Super. Dean, thanks a lot. I mean, Ben, there's a lot of, I mean, there's some interesting common themes coming through, but there are also some issues that make it obvious that you when you're providing a solution to somebody, you've got to be providing it to a fairly varied audience. How do you address those issues, and how do you think about it when you engage in trying to provide a solution to somebody in the private equity space?
Thanks, Mark. There's two interesting points there. One regarding data, another one regarding Yusuf's point around the projects and the effectiveness around those. From the data side, I mean, it's a buzzword at the moment, data. I mean, companies are consuming 3 times more data now than they were 5 years ago, and everyone sees more data as the way forward. You are right when it comes to the private equity space. It's important to realise that not all data is the same. Data is different. You can't come from a listed asset management space and say, yes, we can provide data for a private equity space. What we've seen is we always split the data into 2 sections when it comes into private equity companies. One is the asset investment side of things and the research around those investments, but it's also the data for the investor relationships. Private equity firms and investors are very quickly coming up to speed of the self-service aspect. So where in the past you'd send an email or a fact sheet out to your investors, there's much more along the lines of portals now where investors can ask you in advance, what can I have the AGM minutes, or can I have the investment report? And so you're on the back foot from a perspective to sending this data out, and that's key in regards to being able to respond to your investors in a timely fashion. And I guess moving on to Yusuf's point around the project side of things, and something Helene mentioned the other day around adopt or adapt. It's something that we come across. Obviously, people come up to us and say we have a private equity firm, or we're moving into private equity, and we'd like to speak to you about a new system. It's quite interesting for us when people start those discussions with us. We're part of some sales training at the moment, and one of the facts that came quite interesting was only 23% of buyers will speak to salespeople when they're starting a new opportunity. So only 23% of people buying a new solution actually come to a salesperson and say, "We're a new private equity firm. What do you recommend?" And in fact, 70% of buyers have already made up their mind up what the solution is before they speak to vendors. So 70% of buyers will go to Google and go, "I'm starting a private equity firm, or I'm moving to private equity. What do I need?" And then they'll come to a student service provider like ourselves and say, "We need a portfolio management solution." So we will then go through that process with them, and then if they choose us, fantastic. And 2 years later, when you speak to the firm and say, "Well, how are you finding it now?" They'll respond and say, "Well, it's okay, but it's not really fulfilling our needs." And one of the reasons for that is they didn't speak to us at the very first stage where we can say, "This is our experience. We've had these discussions. These are what we believe are pitfalls or things you should look out for."
Thanks very much, Ben. Yeah, that's great. And I'm interested it's interesting also that you deal with the stuff that you'll be covering would be both from the banal to the really quite sophisticated and interesting data. And I'd like to perhaps dig into that a little later. I see Booty has given us actually made a comment. It wasn't a question. But if you've got a question, Booty, that would be great if you could frame it as a tough question for Dean, put him on his toes, and we appreciate that. Perhaps just moving on, I wanted to look a little bit more closely at, maybe if I can start with you again, Hillian, insofar as you're tracking portfolios, how do GPs, do you believe, best enhance, how best can they enhance their performance through the appropriate use of technology, digitization, as it were?
It's quite an interesting question, and I think a large proportion of it is, and there's some very good surveys out there. Sorry, maybe to start there, where especially in the American market, which is slightly ahead of us in terms of adoption, where they've gone out to GPs and said, firstly, how do you use different types of digitization? How do you use data? How do you use AI? How do you use machine learning? And how does it feed into what you do? And it was clear actually that the majority, if you look at the overwhelming majority of people are looking at the efficiency side of it, which Yusuf was talking about, and about automation and back office. The back office and middle office sort of side of it is everybody can see the advantage there, and I agree with Ben, it's a conceptual advantage, and practically implementing it and getting the best out of it's a different story. And you definitely needs to be a well-guided journey, which is part of what Yusuf does as well. But people can all see the potential there, and they also all seem to indicate that, look, there is actually some efficiencies coming through. So fees are under tremendous pressure, and one of the places in which you can work on that and work on the efficiency is being able to do your administrative function more efficiently and quickly. So that is one thing. But the other thing is, the question then is, do you use a lot of the data that you have to make actual investment decisions and digitization? So there's also digitization as an investment theme, which I don't think we're really onto that. But what is interesting is that the answer to that is not that much. And I do think that the reason for that, some of it makes sense if you look at it. Dean was actually putting it very well, and I can't agree more. As he's saying, at the moment, if you listen to what he's saying, is they are hoarding data. And at some point, they'll have enough data that the trend tells them something good. But I think, like most PE firms are in the hoarding space at the moment, we're not quite at that point where we can go, oh, cool, like it tells me something very clear and usable, and I'm going forward with that. So I think if we look at it, South Africa is normal, we like 2 locksteps behind, but these days not that behind. Also part of digitization, everything gets here faster. But you can definitely see the same things. Everybody you're talking to is looking at the efficiency side of it, and sort of getting to grips with what should they be collecting, what should they be looking at, what should they be keeping. And I'd say we're not really at the point yet where we're going, it's informing my forward-looking decision and trend yet.
That's really helpful. I think that is interesting. I guess something that always has interested me, and I think it depends on the curve in the private equity space, whether you're in the VC space or in what I would call the more refined area of infrastructure, where you've got these really long-term, predictable contracts. In VC, you've got this early stage rock and roll kind of environment where really, to be blunt, half the time you're guessing, right? When you're sitting there trying to work out what your WACC should be, what your discount rate should be, it's not very sophisticated at the VC end. That's like 35. Okay, well maybe I'll drop to 33. But if you do that in what you're doing, Dean, if you do that in your space and shift the discount rate 2%, it has an incredible effect on the business. So perhaps that's a broader question. Just perhaps I'd just be interested to know how you guys might be using it in informing that kind of thought process. Do you guys use? I get you will. So maybe I should firstly ask use of that question. Do your private equity buyers in the GP space? Are they using the information that's available to sort of forecast where they should be thinking about the future discount rates when they make investments?
Thank you, Mark. So I think I definitely agree with a lot of what Helena said. In our space, it's evolving. So if I look at where we are today versus where we were 2 years ago, it's a significant amount of progress made in that space. Is there room for improvement? Always. And I think, how do we get to that improvement? So one of the things that's important when we talk about data is understanding what data is. I think the use case, especially in the private equity and alt space, the use case is the same. Some of your data is coming from external. You can potentially pay a service provider to give you good, clean, good quality data. But in our business, the data comes from within the organization. So you are really creating and harvesting that data. And to do that effectively, you need the right governance. So I'll talk about the governance a little bit later. But I just wanted to position it with that use case, right? When you're creating data within your organization, there's this thing called the knowledge pyramid. And what this pyramid explains is that data lays at the very base of this pyramid. Data in itself tells you nothing. So you're gathering all of this data, gathering, but to get value from that data, you need to synthesize it. You need to create relationships, and that data aggregates to information. So now you're starting to get an idea of the story. So once you have an idea of the story and you have information is something that returns value. You can then bring in, so this is potentially where the portfolio managers and the decision makers come in. They apply the next level of that pyramid, which is knowledge. They apply their knowledge to create insights and use that information to ultimately get to the peak of that pyramid, which is your wisdom. Your wisdom enables the understanding. Your wisdom enables the decision making. So when we think about data, we need to recognize data is the start. And to get all the way up that pyramid, we apply what is called data governance around the pyramid. So I know governance doesn't sound exciting, policies doesn't sound exciting, but to get to successful insights, it's, in my opinion, probably one of the most necessary components of technology and managing data. And when we say governance, we're not talking about governing the data. We're talking about governing the behaviors of the people that manage the data. The more sophisticated your governance is, the better quality insights you'll get all the way up that knowledge pyramid. I mean, simple examples of what does data governance mean? You're talking about defining things like, so who's accountable for certain elements of your data? So say Ben has six data points coming in, and he wants to make the decision of this, bringing in these data points and putting it into this calculation engine. I think that we need to adjust certain components of this calculation. Your governance will inform Ben who has the authority to apply that change, so that the change is applied consistently and there's transparency. It talks about the standards around data. So we can distill all of this to gathering, store, and retrieve. Retrieving is ultimately your reporting element. Your governance policy defines all of those elements. So when you input data, what are the standards? What are the validations, so that when you store it, it's in the best possible state? And how do you distribute it? I think Helene spoke about sharing data and giving people the right data. Your policy defines that as well, your governance policy. It talks about who receives data, when they receive the data, and who are the ultimate consumers of this data. So you're giving the right data or the right information with the right frequency to the right consumer. And I think it's not an event, it's a process. It's continuously refined. So we are on that journey of defining governance to create the insights on our data. I hope that answers your question.
No, that's great. Thanks. I mean, it kind of leads in a little bit. I've got a question in from Andrew. I'm going to read it while I ask Dean to ask. Just gives a bit of a perspective. I mean, taking the idea of data governance, and a lot of that is around the human behaviors that we see. How do you make it really easy for people to do stuff so that they don't stockpile it and never do it? But perhaps just looking at for finance and operations, which is a particular area that you'd be focused on. How do you think about the application of digitization in that space?
Yeah, Mark. I mean, I think from our side, so just on the finance and ops side of the business, and that it's really creating. It's one thing scanning or copying something and saving it on the server. Our business really started in Cape Town, and has expanded. Most of our focus now is outside of SA. So it's really getting access and ability for the regions to also deal on real-time information. And it's really now, clearly these last couple of months we've accelerated some of our initiatives that we were looking at, and it's forced us to re-look at our systems and that. And obviously we've been around for quite some time, so you get accustomed to certain processes and systems and that. This has now forced us to go remotely. We've gone now into sort of cloud-based systems. As I said, we were using some. Now we've just sort of unified them into one sort of platform, and it's really having accessibility for our regions, and everybody being on the same page. Obviously there's connectivity issues or something like that, but we've seen since we've been working remotely, we've addressed those issues, and just having the ability to interact on a more timely basis than that. And I mean, kind of what I would like to achieve and assist the investment team through their process is also, I mean, as I said, just in terms of the data flow in that, and using it across various structures, various portfolio companies. But that's, as I said, on the investment side. But clearly from a finance and ops side, it's more on ensuring that we've got the easy flow of data, ensuring that we still adhere to the compliance and governance and security issues of the flow of data and that. And it's really changing people's mindsets as opposed to pure capturers or just sort of inputting data, to actually saying, well, we've got this data, let's take a step back. This is what I'm being paid to do, is analyze it, come up with alternative solutions, areas and that. So really, I mean, just to sum up in terms of previous sort of comments, is like saying garbage in, garbage out. If you haven't got the right data going in, you're not going to slice and dice it in terms of what you require in that. So it's really, just managing that process and just ensuring that, people's connectivity, people's access, ability to access documents, data, and that is seamless throughout the process.
While you're talking, because I'm going to ask Ben about this in a second, but I'm just interested. You're looking after 51 portfolio companies. I mean, that's a large spread of companies. If you read Andrew's question, Andrew's just asked a question here, just to ask when you have I've made an assumption, Andrew, so if I haven't, just type and correct me. But when you're operating across with a platform across a number of different portfolio companies, and potentially a transaction is being done, he refers there in his question, if you have a peep at it, to sometimes the data amongst companies is held up, especially if you're trying to do deals. And I'm assuming that might be rolling up a couple of wind farms together because you see an opportunity to exit a larger portfolio of wind farms rather than individual ones. And sometimes people are reluctant to share information as readily as you'd like them to. So there's a human behavior element in that. Yusuf referred to that human behavior issue. I mean, do you ever use, before I ask Ben how actually he does it within SS&C Advent's technology, just at a human level, do you see reluctance sometimes between people to operate? And if you do see reluctance, are there some sort of neat bits of advice you have for perhaps for people who are watching, just to how you overcome that reluctance to share information?
Sure. I mean, what we saw in the past is, if you want to attract big buyers and you want to attract a universe of sort of scalable acquisitions or disposals, the only reason you're going to, I mean, one of the main ways to get there is really to throw certain portfolio companies into a platform or group them together. So, I mean, we had quite a successful exit, obviously quite some time now, but it was a combination of 3 portfolio companies, and just created that extra scale that attracted those buyers. Now, clearly, one of the key issues is confidentiality. But in our space, we're investing in a fund. I mean, so we've got a fund and we invested into various portfolio companies. So where we sit, we pull the project companies together to create scale. There's not going to be confidentiality issues really there. It really gets when you're going between funds, and they're not only confidentiality, but you also got to be mindful of any conflicts of interest. If you're disposing from one to another, also, you making sure that the LPs on both funds are being treated fairly in that. So I think the human behavior has shifted as long as there's a common outcome. And I think as long as we tick the box in terms of managing any confidentiality restrictions, any conflicts of interest, the benefit is there. And we've seen that, as I said, we saw it on one of our larger exits a few years back. last year we did a exit of 2 renewable companies, same type strategy, put them together, and we had a big buyer come in and take out our share in that. So yes, I mean, I think sharing the knowledge and the data across the companies is not only useful from a GP point of view, but obviously from extracting value for the LPs. So yeah.
Ben, I mean, I think you've been listening to this, and I see that, thank you, Andrew, I see that was a useful answer to the question. But I'm actually also interested, Ben, I mean, insofar as you're providing solutions, can you just give a sense of the way in which you're dealing with, I can well imagine what the back and mid office is like, but it would be good if you could mention that. And also just the front office, and then also the interconnectivity between 51 portfolio companies. I mean, to what extent are they even able to share with each other if they wish to? So perhaps you can just give us a bit of a sense of the sort of architecture and the areas that you find are really valuable in the types of solutions that are being offered to the market.
Sure. Thanks, Mark. There's no silver bullet. There's no one answer for all solutions. There are situations where you still have people who very much rely on paper and still require that one-on-one physical interaction. The way we try and resolve those situations is to make it as easy as possible for these people to get the data into the systems. So be it document scanning software, which is becoming very big in regards to investment systems now, like Vidado, where you can there's no longer that, or I haven't got access to a fax machine, or some of these areas before where people might use as an excuse not to continue that process. It's becoming a lot easier for companies now because it is very digital. Things like the private cloud, I think most people have seen over the last 6 months, because the way the world's gone, it's a lot more people are having to look at remote working and it's not relying on on-premise solutions as much as they were before. So having the private cloud solutions out there, which are secure and being proven to be secure, has taken away some of that reticence from other companies not to interact. From our perspective, we have a number of portfolio management solutions and software that can interact with a number of different solutions and services to be able to try and provide that one-stop shop. But yeah, there's no silver bullet to answer every company, unfortunately.
I mean, what always interests me, I mean, there's a funny little measure I have to see how we're progressing as not just as an industry, but just in business. And I don't know if any of you have ever tried to find a decent business card scanning tool. I've been looking for 10 years. To be honest, I still haven't found anything that works very well. And it's an interesting one because I was once in the business. I ran a business that was involved in doing, amongst other things, scanning number plates. So for security purposes, I ran a security tech business for a while. And it's not an easy thing to do. And neither is, if you think about it, trying to scan business cards an easy thing to do. Ben, insofar as, I mean, the data inputs, scanning documents, OCR is vastly improved from where it was 10 years ago, but there's still issues there. And I'll share a funny story, actually. I discovered that if I scan a document that someone has taken a Cokie pen and blacked out an area, that if you scan it and then OCR it, you can see what's written underneath it. Now, that's just fascinated me. So with all of that, I mean, just inputting data, I mean, how well advanced are the systems that you use?
I mean, from our perspective, as I say, it's improving on a weekly or monthly basis. Be it systems that you can use to scan documents, or even this for the data scrubbing side of things now as well. So taking away the manual input has increased a lot, and I think there's a lot of work being done around audit trails and auditing of that data as well. Most people, much like ourselves, now have solutions and services to assist alongside each other, so that when companies start at the morning of the day, the data is there already. It's been produced to them in a format that they would like, and any scrubbing of that data has been done already as well, so that as soon as they get in, they can start doing the fun stuff of the day rather than the day-to-day maintenance.
Got it. No, much appreciated. I see Andrew suggested I use Camcard. I have used Camcard. It's actually a good product, but just still not perfect. The thing I'm interested as well in perhaps is just understanding a little bit more about legacy systems and other restrictions to growth. I mean, Helene, in your experience of working with digitization, you will have seen a number of legacy systems in place.
Yeah.
They can be incredibly restrictive at a point, but you can't get away from them. You hate them, but you got to live with them, and you got to love them. So, do you have a perspective on dealing with legacy systems and how they restrict growth and if perhaps
Yusuf actually said some very sensible things about this when we spoke last. But the thing with the legacy system is that you are invested in it, and the amount of time, effort you locked into it, and what I find almost it is the time and the effort and everything else that went into it, and it is now customized. But it's also like I've often seen in our business, we've spent the last 10 years thinking about how to optimize that thing. And just the whole act of going, we have to stop thinking about that thing. It's really hard. There's like, it's like death in the family. There's mourning, there's acceptance, we move on, we go through the whole process. But what I've also found is like, there's so many off-the-shelf products available at the moment. And so the one good thing that's come with digitalization lately is integration. It's so much easier. The plug and play between systems has gotten a lot better, but it still is quite difficult. And so that decision around both letting a legacy system go, but also deciding whether to develop or whether to buy off the shelf it's a lot more nuanced, I think, than I necessarily appreciated when we started looking at these things. And I know Yusuf looks at it very in detail. But, the balance between the two is often quite finely balanced. What I was thinking about, Mark, while you were talking to Dean about data and companies' underlying data, something which I have noticed, which we've noticed from our point of view in the last couple of years, is if our clients invest in things, where data and how you will get reporting was sort of a relatively small part of what you agree, it's growing all the time. It's how much data and in what time frame, in what format, and that portion of what we agree with the investments that we invest into, whether they're funds or whether they're companies or whether as data becomes valuable and the ability to get through it at a speed becomes more valuable, that part of contracting and purchasing is also grown significantly.
Yeah, you spoke very little, so I think almost a bit too passionately. I suspect that there's an issue about curated access.
Yes.
So there were two things. So I'm going to throw this over to you, Yusuf. I mean, if I think about so curated access is a great term, actually. It captures so much in two little words. But as any financial investor, we've all done some finance in our lives, right? You have a sunk cost principle. So why we get invested in legacy systems? I think we understand why we get invested in them, but also we get invested in them, I think, emotionally. Just again, you spoke about the governance process and human behaviors. Just give us a bit of a sense about curated access and this clinging on to legacy systems and are there any steps we can take to just let go?
I wish there was a easy answer for this one, Mark. There isn't. So I think when it comes to legacy systems, you often experience in the organizations, sometimes the people that built that legacy system are in the organization. And it's something that it's like a kid that grew up in the organization, from infancy all the way to adulthood. And now you need to slaughter. But do you? So yes, we can reach a point where the legacy system no longer supports the business objectives. The approach to replacing your legacy system is really twofold. You can take a iterative, you can evolve the legacy system, or you can say, we're going through a revolution, we are going to switch from this to that. There are pros and cons around both. So it really depends on the organization and what you're trying to achieve. My suggestion is that go through a revolution once at every 5 to 10 years. Then you evolve. There's this concept of agile, of continuous improvement and continuous improvement. It's taking an iterative approach to evolving your system. What we also need to do while doing that, and I know Ben spoke about this the last time, is that it's finding the balance and allowing integration between your legacy system and your new system. So think of it as a two-speed world. You've got this hyper-fast new data coming in, new technology, frequent updates, and then you've got this 10 kilometer per hour traditional system, lots of institutional knowledge, and it has its value. But instead of replacing the one with the other, you let the one slowly consume the other. It's a more manageable approach, and it's an approach that often returns meaningful results rapidly. So you're putting out quick results. Whereas if you go with the revolution, there's nothing, and bang, this big change in the organization. Again, sometimes that's necessary. So I think in conclusion, the approach really depends on where you are in your organization, the health status of your legacy system, the competence of the people, both internal and your business partners, to aid that change, and making sure that you're doing the change for the right reason.
Thank you. Thanks, Yusuf. I mean, I've got two questions for Dean, and I actually think it'd be unfair to ask them both. I'm going to ask, I'll tell you what the two questions are, and then I'm going to ask you to let me know which one. Let me tell you which one I'd like you to answer, because I think maybe Ben's better to answer the other one. Two questions I had is, one is with the advent of ESG and sustainability requirements, SDGs and the like, and particularly with your sourcing of, in your case, you will be sourcing investment from across a huge range of DFIs, of sovereign wealth funds, of institutions that have considerations that just are massively different, and yet all massively data intensive about reporting about the underlying assets, how many of them are achieving which goals. And each one will have, the IFC, they have the IFC requirements, well, that's one set. And then you've got someone else has got a different set of requirements. And pretty soon you actually have a pretty complex solution. So I'm not going to ask you that. I'm going to leave that for Ben in a second. But before I ask Ben, I have a different question for you. When you're dealing with all of the data that you're seeing, how do you use that data to help you in the process of filtering future deals? Are you able to do that? Because you must have a tremendous amount of information on inquiries, what worked well, which kinds of, where you originated your deals from, how they were structured, what they were linked to. Are you able to use this as a tool to be much more efficient at the front end of going out and finding transactions, looking in the right places, asking the right questions, not making the same mistakes as any of us in private equity all know? We've all made those mistakes, and sometimes twice, but never a third time, because you lose your job if you do. So perhaps just maybe answer that question. I'll let Ben, I'll come back on the ESG nonsense. Not nonsense, but I mean the ESG stuff, because it's a long, when I said nonsense, it's a long answer, I think. So shoot away, Dean.
Yeah, Mark, I mean, look, I mean, we've all got our sort of, what do you call them, the scars. We've been being in a business, being in our business for like 20 years, you are going to get some scars. And I think, it's actually, when you get those type of scars, you actually do, we actually do a full case study, and we see where we went wrong. And I mean, it's a combination one of, absolutely, give you an example, doing a solar or a wind farm in South Africa is vastly different to doing something in Kenya. You're dealing with maybe one farmer or one landowner. In Kenya you're dealing with 300 landowners, pockets. So and then you got to negotiate and ensure that the leasing arrangements meets all the 300. We've learned a couple of lessons around that, and when we look at another opportunity like that, we definitely take a step back and say, okay, are we adequately going to address all these risks? Yes, I mean, LPs do have significant requirements in terms of ESG factors, and it's just getting the opportunity, looking at a deal opportunity. We actually screen, obviously we've got our ESG personnel up front in the process, screening the risks. Where does it fall in a category risk allocation? What do we need to be on the lookout for? And then also, it's taking that and just continuing engagement throughout the process. I mean, if you don't learn from your mistakes, yes, as you say, people aren't going to be around for obviously you do one or two mistakes, you obviously learn your stripes and your scars. But I think you're gathering that data, and as long as you're using it and putting it to good use, it's there to be used. From sourcing opportunities, yes. I mean, obviously we got members in the regions looking for opportunities in that, and doing a gas deal in Ghana, similar risks associated with gas deal in Nigeria, but obviously nuances with in-country requirements in that. So you have, and there's nothing better than actually having boots on the ground with people in the region, and they know exactly what's happening in terms of the local environment, the local requirements and that, and pulling those data sources and that. I mean, we have weekly team meetings, and I'm sure all private equity houses do that. But it's really just plugging in across the teams and saying, well, geez, guys, we've got this opportunity. Hey, we saw this on a similar deal, or we've seen this risk on a deal that we turned down a few years back. Let's have a look at that. Why did we turn it down? These are the main principles, and sort of building on from that. Just pulling that together and making sure that our decisions and processes moving forward on opportunity are well thought out and got reference to previous dealings or benchmarks that we've obtained, both through previous opportunities that we didn't pursue, but also what we're seeing in our operating entities that we're managing.
Super. Now I'm going to, just while I ask Ben to respond, I'm just going to ask here, maybe have a peep at the question from Baron Africa about legacy systems, if you don't mind. In fact, maybe between you and Yusuf, maybe just to give a quick response on it. But I'd just like to ask Ben while you're just having a look at that, so we can give him a quick answer, and then we're going to wrap up. Ben, as your last question, just insofar as the ESG is concerned, I mean, this is a massive part of the future, and it's going to, your pension funds and DFIs are going to dictate in the emerging markets, quite frankly, how investment goes. So it's incredibly important, and they're going to drag the GPs there, to be blunt. GPs aren't leading them. They're going to be dragged there. And this is where, which makes a very powerful story. How do you deal with the reporting at a very, just at a quick level? Is that something you guys handle well in SS&C? Because it's a multifarious set of requirements.
Absolutely. I mean, our reporting capability is one of our strengths. Be it ESG, private equity, or throughout other asset management listed or unlisted products. We have a number of reporting tools, and we have a number of portals. One thing we've noticed recently in regards to the portal side of things is it started off as very much an investor portal. We'd use it for investors to see their day-to-day, their portfolios, or to contact their relationship managers. But we've noticed more recently how it's been turned around, and we're using the same portal for relationship managers to see how their portfolios are looking as well, so they then can deal with requests from their investors. But from our perspective, ESG is extremely important. It's something that much like when we expanded into private equity, we will expand into ESG as well and take advice. And I know we've spoken before about standard reports or standard data. We find that there's no specific standard report that everyone's using. Everyone's got their own standard. So we will listen to our audience, we'll provide what we believe is the standard, and then we'll adapt that to the clients. This basically, I was reading Baron's question beforehand.
Okay, why don't you answer it and then we'll wrap up?
Sure, I think it's more of a statement rather than a question, and I fully agree. It's one thing we notice very often, how people's jobs or people's bonuses are related to specific projects. So in regards to migrating or regards to removing legacy systems, there is a personal fear there or a personal goal. And the way we see about getting around that is working with people like Baron or whomever and doing the due diligence with those with the vendor, ourselves or whomever, to make sure you have that confidence that when you do make a decision, you are making the right decision. It does come down to a call from the person at the end, but it's just doing the research beforehand, doing the due diligence beforehand, and making sure that all the stakeholders are sold on the solution.
Thanks very much, Ben. Look, I'd like to thank Africa Global Funds for hosting us today. I'd like to thank Ben and SS&C and Advent for sponsoring this event, and particularly good to have you along. Thank you. Yusuf, thank you for your very interesting insights into the backbone and the philosophical approach.
Absolutely.
Dean, on your side, from the much more practical side, I guess, in a way, as you talked about scars on your back. And Helene, just the tremendous general experience that you have out of Riskira. Thank you very, very much, guys. Really appreciated it and look forward to the next time. Thank you. Bye-bye.
Thanks all.
Thanks, everybody. Cheers.